All right, LLPs. We're running through all of our entities, all of our business structures. Now, we mentioned LLPs before, but we're going to go into more depth with them. LLPs are going to be a type of partnership in which partners have limited liability for the partnership's debts and obligations. It's going to be similar to a general partnership in most respects. However, we've got our key features of the LLP. Remember, don't get confused with the LP versus LLP. I know there's an extra L there. You were not aware. But they also are different types of entities as well. Now, LLPs provide limited liability to all partners, meaning that each partner is only liable for their own actions and the actions of those under their direct control. So we see that as a distinction. Partners are not personally responsible for the partnership's debts and obligations beyond their own investment in the partnership. That is different from a GP. Now, I'm going to jump actually to point number 5 because this kind of paints a picture as to what we're talking about specifically. Why does an LLP exist? What is an example of what we would see with it? Well, LLPs are commonly used by professionals such as lawyers, accountants, and architects who provide services to clients. So when we think of LLPs, if you want to think of a professional service firm like those, definitely do that. Those are more so what you'll find LLPs being used for. This is because the limited liability protection of an LLP shields individual partners from the actions of other partners in the firm. All right, there we go. Now, you could totally, in your mind, think of 3 different, let's say, accounting firms. One chooses to be a GP, one chooses to be an LP, and one chooses to be an LLP, and assign the attributes of everything we see here in our lessons to those theoretical partnerships. Now, filing an LLP must file a statement of qualification, not as important as knowing the statements for, let's say, an S Corp, C Corp, all that stuff. State to register the partnership. The statement typically includes the names of the partners, the name of the partnership, and other information that's required by the state. In terms of management, like other partnership structures, partners in an LLP directly manage the business and share in the profits and losses of the partnership. LLPs do not need a GP to form, however, LPs do. So again, to form a limited partnership, you do need a general partner there. And for an LLP, you do not need a general partner, something to note. Now, transfer of ownership, LLPs usually require unanimous consent of all partners for the transfer of ownership interests. Now, this is to ensure that new partners are acceptable to all existing partners and to maintain the stability of the partnership. Again, since we are talking professional services, lawyers, accountants, reputation, pretty important here. So it makes sense that we would require unanimous consent, making sure we have a solid reputation, that all of the accountants, lawyers, every professional within this firm does have a solid relationship. All right, now we're talking about LPs. We saw LLPs. Now we're diving more into LPs. We're gonna completely lose ourselves. We're running back and forth. It's LLP, LP. Next, we're gonna have the LLLP. That is a joke. We do not have that. That does not exist. The limited partnership business structure. This is a type of partnership that's made up of at least one general partner and one limited partner. So we've talked about that thus far. Make sure you memorize that. Make sure you know that you have to have one of each. As with the GP, management is the responsibility of the general partners. So this is an entity, and it's got 2 people. Well, just like all partnerships need to have at least 2 people. However, for an LP, you need to have 1 GP and 1 LP. So that is, again, how that works. And no matter what the partnership, you need at least 2 people. That's the essence of a partnership, for it to be 2 or more people. But then LPs need a GP and an LP. So just memorize that. You'll be good to go. 2 types of partners, right? We need 1 GP, 1 LP. Remember that LLPs do not need a GP, but LPs do. An LP must file a certificate of limited partnership. Not too important as some of these other points like this one. Limited life. This does not have an unlimited life unless otherwise agreed upon. Again, I'll give this example. This is something I know a lot because I've worked in the industry. The asset wealth management space, the investment management space. We think spiderweb structures of entities, funds that own other funds, investment funds. You got the rich people fund, the endowment fund. You got the pension fund. You've got a GP, and you'll have LPs. So again, maybe the LP would be the let's say New Jersey firefighters pension fund, and they invest. They create funds, and they each own a portion of the fund, which invests in various things. Maybe they have fund number 1 that invests in offshore oil rigs. You've got another fund that invests in amusement parks, another one that invests in shipping. And all of those funds are, in essence, just more specialized and alternative investments as compared to the pension fund just going on the open stock market and buying stocks. Here, they're using a private equity or hedge fund to invest for them. And that's the general structure, right? This is the private equity or hedge fund. And this is, again, just like, or it could just be a high net wealth individual. Maybe Tom Brady, once he retires from the NFL, he's gonna, if he ever retires, he keeps coming back. He's gonna create the Tom Brady pension fund. Wouldn't be a pension fund, but the Tom Brady super wealth. Buy myself an extra yacht fund, or maybe for his kids or something like that. And he would be the LP, whereas let's say investment firm ABC is going to be the GP. That's that structure. And this does exist outside of that investment management, alternative investments, asset space. That's just an example I'm giving you and something to kind of latch on to. Now, the general partner, as we mentioned, they do have unlimited liability. Yeah, they're going to have to, they're on the hook, right? They're the one doing the trading, doing the business. The limited partner, again, think of them kind of like a shareholder. They have limited liabilities, and I even make the point here. They're pretty similar to shareholders of a corporation for the purposes of what we're going to see. There's a lot more to it in real life, so don't take that as, say it to people in the street, say, hey, Nick said it's pretty much the same as a shareholder of a corporation. Nope, just for the purposes of the exam, you can kind of think of them like that. Now, one person can be both a general and limited partner. That is true as well. In an LP, one person can serve as both a general and limited partner. Transfer of ownership. Partners cannot transfer their ownership in the partnership without unanimous consent of the other partners. So again, maybe it's like Tom Brady comes together. It's the Oklahoma police pension fund, right? That's another LP. And then maybe you've got another one. You've got, again, let's say an endowment fund. That's a common one. You've got an LP of the Loyola endowment fund. Man, I wish they had more money to spend back in college when we were there. But hey, maybe the endowment fund will grow and grow and grow. Now, that is kind of the structure, how that all works. We cannot transfer ownership without the unanimous consent of everyone else. And you probably won't have a lot of LPs. You may have, let's say, 10 LPs at most. So nothing too wild, and you'll be in a fund of your choosing. Partners cannot transfer the ownership there, the right to inspect the books. Now, both general and limited partners have the right to inspect the books and records of the partnership. Think of it as kind of a more close-knit corporation structure, right? If we're viewing these as shareholders, view it as more of a close-knit, like we're meeting together a lot. We're probably, all kind of on the same level. Whereas if I buy a share of Apple, I'm not really on the same level as the C-suite of that company. Profit sharing. Profits are generally shared among the partners based on their contribution amounts. So if this contributes 10 million, this contributes 5 million, this is 5 million, right? You divide it up based on that. The GP would also contribute something generally, so they have some skin in the game as well. Now, dissolution in LP can be dissolved by the occurrence of a specific time. Written consent of all partners, withdrawal or death of a general partner, or judicial decree. Pretty much the same thing as we saw earlier. And lastly, if there's a loss on dissolution, only the general partners are liable. Meaning, if this business entity goes to hell, only the GP is liable. Yes, these individuals are likely going to lose their initial investment. However, if there's additional losses on top of that, they involve themselves in some incredibly complex options derivative trading strategy, and they take out an incredible amount of margin. The GP will be on the hook for any excess losses. These people are going to be on the hook for their initial investment. Lots of great stuff. We're having a great time. You are going to be quite the expert by the end of all this. All right, and just more comparisons, right? The more examples we have, the more comparisons of these entity structures, the better we will be prepared. Now, a limited partnership, that LP, that's a business structure that consists of one or more general partners who manage the business and are personally liable for its debts, and one or more limited partners who invest in the business, but they do not participate in the management, and they're only liable for the debts to the extent of their investment. On the other hand, we have the LLP. Think of that professional service type of group, whether that's a law firm, accounting firm. All partners have limited liability, and they're not personally responsible for the debts or liabilities of the partnership, aka the other partners. They don't want to get screwed over by the other accountant in the firm or the other lawyer in the firm. Now, while both of these entities are going to provide limited liability protection, they're structured differently and have different requirements and regulations. LPs are typically used by businesses that involve passive investors, so like I said, like shareholders, while LLPs are typically used by professional service firms that want to protect their partners from the negligence or misconduct of other partners. Well, that's your problem. What are you doing? Having partners in there that could even be possible individuals for negligence and misconduct. I only enter into business with absolute saints and angels, and as you should too. No one I do business with would ever be guilty of negligence or misconduct. But I guess some people do that. I wouldn't know anything about that. All right, talking a little bit more about the operations of a limited partnership. Let's see what we've got. The general partner's liability, right? Unlimited liability, and I'm beating this to death, right? The things you're going to commonly see as questions Oh, you will see him a million times and you're not going to forget. Dual role, we can have a GP be an LP as well, similarly, but you need a GP. Remember that. Creditor status, a general partner may act as a secured or unsecured creditor of the partnership. Limited partner's liability, a limited partner's liability, it's restricted to their investment and any unpaid capital commitments. They are not involved in the management of the business, cannot bind the partnership in contracts. So limited partners are not agents of the partnership. Keep that in mind. However, they do have the right to review the partnership's financial information and tax returns. Participation in management under the Uniform Limited Partnership Act of 2001. Limited partners are not held personally liable for participating in the management of the partnership. They can vote on extraordinary matters without incurring liability, such as admitting or removing general partners, dissolving the partnership, amending the certificate of limited partnership, substantially selling all assets, anything like that, those significant business operations. Assignment of interest. Now, limited partners can assign their interest in the partnership, but you're not going to give away your actual ownership of the partnership in that sense. The assignee acquires the limited partner's rights to profits, and the assignor ceases to be a limited partner upon assigning all of their limited partnership interest. Adding new partners. A new partner can be added to the limited partnership only upon the consent of all existing partners. Fiduciary duty. General partners do have a fiduciary duty, whereas limited partners do not have a fiduciary duty. Just making those comparisons, drilling it down. And lastly, profit and loss sharing. If partners have agreed on profit sharing, that agreement governs everything. It is the overall rule. It's what you follow. In the absence of an agreement, general and limited partners share profits and losses in proportion to the value of their contributions. However, a limited partner's liability for losses is limited to their capital contribution, so you're not going to lose more than you invested. If that firefighter's pension fund contributes $10 million, they're not going to lose more than $10 million. That would be the maximum amount they'd lose. I mean, hey, that's not fun anyway, losing $10 million, but better than losing even more than $10 million. Am I right? Couldn't imagine losing that amount of money. That would not be a good time. All right, terminating a limited partnership. And yeah, there's a lot of similarities between the different types of partnerships, right? All that good stuff. And that's just I was going to say that's just how it works. Yeah, that's how it works. Make sure you're understanding the differences. Make sure you're memorizing the differences. Make sure you're understanding the similarities between all of these. LLPs, not as important, whereas LPs and GPs going to be kind of the bread and butter, what we need to know here. But termination of a limited partnership involves certain steps and a specific order of asset distribution. We've got pretty much the same thing for LPs. We got the occurrence of a time or event mentioned in the partnership agreement. Maybe if we make $100 million, the partnership will dissolve at that point. We don't want to get too greedy. Written consent of all partners. So we're talking about, okay, no more partnership, it's over. Withdrawal or death of a general partner. Well, you need a general partner in there, and if you don't have that, then boom, it's ceased to exist. And judicial decree, that would be another example. Now, it's important to note that the death of a limited partner does not dissolve the partnership. We said that would be a general partner. After the dissolution, the termination process of the limited partnership includes the distribution of assets in the following order. Again, very similar to bankruptcy, very similar to what we saw for general partnerships. We're going to first pay off the creditors. Then we're going to pay off former partners in satisfaction of liabilities that were not paid on their withdrawal. So that is going to basically be the IOUs to the partners. And then we're going to pay off partners first to their contributions, and then the remainder will be profits. This is the same thing as we saw for GPs, just going over it again in terms of LPs. Now, yeah, take a look. Nothing too wild here, nothing we haven't seen before, but making you an expert, making sure you are fully prepared. Any type of question that comes across your way for partnerships. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.